Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the second report of 2017, and as usual we're going to start off with the changes in commercials positions, so here we go. As you may see, we've got the Chicago wheat on top of our list with a 30% change in commercials positions, 37 in large speculators. You can see, and actually there's a 36% change in small speculators also. So all changes above 30%, pretty large changes. But of course, if you look at the chart, we do see similar changes happening quite often in this market. So we're not that surprised. This change, of course, is a bearish COT signal that may affect the market in the near term, meaning let's say up until Wednesday. Opening a 5 years chart, you can see how extreme this market has become, or where it was standing for quite some time. Actually, this is this bullish extreme that has been present in the market for almost 1.5 years, and we're just seeing it to be moving out of this range, this bullish extreme range. Of course, you can see that not necessarily can get out of that range. Back over here in mid 2016, you can see that it jumped back towards the bullish extreme levels as prices went even lower from there. So the big question, of course, have we reached the bottom in this market? I think that's going to be answered in the upcoming weeks or even month, and then of course it's going to be a pretty obvious picture what has happened. The next market is another wheat market. It's the Chicago wheat. Sorry, it's the Kansas City wheat, where of course we have a similar picture as we had in the Chicago wheat. We have a large change, at least it's a smaller change than we had in the Chicago wheat, but if you look at the chart, this change is definitely in relative terms larger than average. So it's a 20% change in commercials, 25 in large speculators, and we've got a huge 40% change in small speculators. Again, this is of course a bearish change signal, and we can expect this to maybe halt this rally, this dynamic rally that has started off a couple of weeks ago. And of course, the wider term picture is showing us that we are definitely moved away from the bullish extreme levels. Here, maybe you can see that the range that we saw in the Chicago wheat is not that obvious here. Actually, we had a more of a pinpointed extreme. That was the case in early 2016, and from there was a gradual decrease in in case of commercials, a gradual decrease in their net long positions. They actually went down to net short, and of course in large speculators, they've from their net short positions, they've gone back to net long territory. So as you can see, we are moving here in the Kansas City wheat. It's more obvious that we're getting closer and closer to bearish extreme levels, which suggests that this rally that has started a couple of weeks ago may not continue for that long. The next market that I want to show you is the platinum market, where we have a 16% change in commercials positions, 15 in large speculators. These changes are large changes. You can see in the past couple of weeks, barely did we see a larger change in traders' positions. If we jump to the 5 years chart, then of course you can see that we're still a little bit closer to bullish extreme levels. Not surprisingly, if you look at this 5 years chart, prices are still relatively low, and of course this means that prices may go even higher from here. And of course, if they do, I wouldn't be surprised to see commercials going down to let's say 60 or 70,000 contracts net short levels. Large speculators going back towards 50,000-60,000 contracts net long levels. Let's move on and have a look at large speculators COT Extreme. Here we go. We've got cotton on top of a list with a all-time COT Extreme. Not only do we have all-time in large speculators, but also we have that extreme level in commercials. So it's a significant bearish COT Extreme. That was actually the case a couple of weeks ago. That was already an all-time COT Extreme, a bearish one, and you can see that prices have actually gone lower, but then they jumped back, and as they did, the COT report, of course, has changed itself towards that picture as well. So now we have an even greater extreme, and that suggests that this rally that has started at the beginning of last year may be coming to an end. Cocoa is our next market. 236 report extreme over there in large speculators. They've actually gone below the zero line, so they have gone down to net short territories, which wasn't the case for quite some time, since 2012. This is the first time that we see large speculators becoming net short in this market. So that, of course, is a wonderful signal for a bullish move. We have had a significant drop in prices, and the report suggests that this may be bringing us a bottom, or may have already brought us the bottom. So that's, of course, a question that you should decide. We've talked about the Kansas City wheat, which would be our next market on the list. So let's jump over to live cattle, where we have 108 report extreme and large speculators. Here we go. You can see it over here. It is a bearish COT extreme, of course. Not an all-time, but definitely a significant one. So again, I think we can expect prices to halt or decrease this rapid price increase and stagnate and possibly turn downward. So that's what I think we can analyze from the COT report now. That is going to be all for this review. Of course, don't forget that you can look at other COT charts for free on our COT charts page. A more in-depth and detailed COT analysis can be reached on this page that we are right now on. You can, of course, analyze other COT report types, CIT, TIF, disaggregated, of course. You can look at the futures and options data type, or do your historical analysis on older reports. You can look at all markets, of course, and add great other functions to the table. I hope you enjoyed this review, and I hope to see you next week. Have a great week. Take care. Goodbye.